Continuing on with our line of banking videos, we have Citibank up next. Again, if you've watched my videos on Bank of America and Chase, feel free to apply the same summary here. Need a credit card? Go to the bank. What banks are there? Well, aside from the ones I mentioned, Citibank is another. Hey guys, this is Newfire, and welcome to the penultimate video of my series, SSSMI. As you can see, we're going to be talking about Citibank today, and after this, we only have one video left, serving as the end of the series. So without further ado, let's get on with Citibank. So for the basics, Citibank is, as you may have guessed, a bank. It was founded in 1812 by Samuel Osgood. Fun fact, Samuel Osgood was appointed the first Postmaster General under the country's first president, George Washington. The post serves as the head of the U.S. Postal Service. And then Citibank today is one of the world's leading banking institutions. Now, brace yourself because we're going to take a look at its stock. So when Citibank was formed by a merger of two companies in October of 1998, the stock price per share was $189. The stock reached a peak price of $533 before dropping, and now currently trades at around $46. Now you're probably thinking, what happened? Well, that merger I mentioned earlier wasn't the best thing the company could have done for itself. The struggle started there, and then the 07-08 financial crisis was the final straw on the camel's back. In fact, the company was on the brink of insolvency when the government stepped in and provided them with funds. Since then, the company's been on a steady road to recovery, but as we've seen reflected in the stock price, it's nowhere near where it was 15 years ago. However, if you bought $1,000 at Citibank's lowest in 2009, your shares would be worth $4,500 today. Just something to keep in mind. And what's next for Citi? Well, the company needs money, ironic for a bank, and hopes to free up capital that they have in assets by selling them off. By using its funds more wisely than they did back in the 2000s, the company has a good possibility of rebounding. If all goes well, in the next decade or so, we can hope for the stock to double, and its low cheap price right now could be a good opportunity to buy. And that's all we have for today. It can be a little scary seeing a past so volatile as this, and can make you wonder if your money will be safe. But if it makes you feel better, the worst thing that could happen has already happened. As the saying goes, the company's hit rock bottom a while ago, and it only goes up from there. At their lowest, the price of one stock was below $1. Now it's at a steady $46. And we've seen a real-life example of the government somewhat protecting financial institutions. Keeping all this in mind, it's time for you to make your decision on whether this is the right investment for you or not. Whatever you choose, make sure you invest your money wisely. And now we've just got one company left to talk about before the end of the series. Thanks for watching, and stay tuned for the ultimate video of SSSMI. Visa. This is Newfire, signing out.